This is Rick Rule for Rule Investment Media and the Rule Classroom, sponsors of the 2025 Rule Natural Resources Symposium, July 7 through 11 in Boca Raton, Florida, or via live stream from the comfort and convenience of your own home. Know that I think that this is the 30th year of the conference, which means that we have a lot of history and a lot of practice that you can draw on. The conference has a few unique features that you need to understand. The first is that we're going to give you over 50 hours of very intensive and very valuable information in 4 days. The bad news is that's more information than you can possibly absorb. So you will have access to the conference tapes for a full year, the conference recordings, and you're going to need them to maximize your benefit from the conference. A few other things you need to know about the conference, too. Because we only have 4 days to give you all this information, we interview every exhibitor and every speaker before the conference so that you can familiarize yourself with the materials and the opportunities and maximize your time and your return on capital employed at the conference. Further, unlike any other investment conference in the planet, every public company exhibitor at our conference has been vetted. Specifically, if they aren't owned in accounts owned and managed by me, they aren't allowed on my exhibit floor. At every other conference in the world, the qualification to be an exhibitor is merely a check that cashes. No guarantee because I own a stock that the stock goes up, but there is a guarantee that the exhibitors have been vetted. So, one more thing, actually. The consequence of that, the consequence of our familiarity with the value that we're delivering you, is that anybody who attends our conference, live or live stream, does so with a full money-back guarantee. If you think for any reason that we haven't delivered you the value that we promised you, unlike any other investment conference on the planet, you get your money back. If you don't think you got your money's worth, email me. I'll give you your money back. In 30 years of making this guarantee, we've refunded about 0.1% of the tuitions that we've charged, meaning that we have delivered value. And this interview is meant to deliver value to you. So let's begin the process. Right now, I have the great good fortune of interviewing a man who I've invested with and become friends with for more than 3 decades, my friend Bob Quartermain, serially successful explorer and mine developer. Bob, thank you for 35 years of friendship, and thank you, too, for your ongoing sponsorship and support of the Natural Resources Investment Symposium.
Thank you, Rick. It's a great pleasure to be able to attend this year and to be able to speak with you today.
So let's have the Bob Quartermain resume with a particular emphasis on the task at hand, which is to say how you've made money for shareholders in the past.
Right. Well, I'd like to start with the fact that I'm a geologist, and I had the great fortune of starting my career with Teck Corporation and actually working underground at the Lamaque gold mine and the Hemlo mines. So I know what a mine looks like, and that's what I decided to come out of school and be able to understand. That allowed me, as you point out, with my time at Silver Standard, to take that vehicle when we first financed it back in 92 and 93 from a 2 million market cap up to 2.5 billion. And we did that by deploying good geology. We came up with a number of projects, which ultimately became mines, the Manantial Espejo project, the Perquitas project, and probably most importantly was the spin out the Brucejack project, which you and I talked about some 25 years ago about the opportunity there, and it became Canada's 4th largest gold mine. So I've been able to take my geology background, particularly that of an underground miner and working in open pits, and translate that into good returns for Silver Standard and its shareholders, but more importantly with the most recent project I had, which was Pretium. And that's well suited me for the task at hand, which we're now down in the historic Homestake district, where we have the underground Homestake mine and an extension on our Maitland project, and the Richmond Hill surface oxide project. So well positioned to, as you say, create more value for shareholders again from gold using good solid geology.
So let's talk about the task at hand. Dakota Gold is, for the benefit of our listeners, revitalizing, if you will, the old Homestake camp. Tell us something, first of all, about the historic production out of Homestake and the nature of the mineralization. We'll get into the 3 stages of opportunity in a second, but give us an overview.
Right. So the Homestake District in total has produced over 45 million ounces now. You have over 40 million ounces coming from the Homestake mine itself. It's what's called a banded iron formation, and it's similar to other banded iron formations we find here in Canada, the Musselwhite Project, for example, or the Lupin Mine. These are basically sediments rich in gold, and they've been crystallized and formed billions of years ago. Ours is about 1.7, 1.8 billion years old. So you have very old rocks, but they're very easy to follow and chase. You go down dip. So the original discoverers of the Homestake mine back in 1878 started mining, and it mined continuously for over 120 years. And adjacent to it is younger rocks, tertiary rocks. And there was an event that happened many tens of millions of years ago that took some of that older gold and brought it to surface and put it into lower grade surface oxide material. And you have that at the adjacent Warf mine. So what I like about the district, Rick, is that when you look at what's been mined and what we now have still in the overall district with the resources we found is what is Warf has. You're looking at a 60 to 70 million ounce district, all within a 4 or 5 mile from each other, 50-minute drive from our office. It's pretty amazing, a well endowed mineral environment and a good place to be because of location to infrastructure and many other things which are important nowadays as you develop a mine as a development company such as ourselves.
Let's start with the last point first. I think it's important to note that your last mine was truly in the middle of nowhere. I remember taking a long helicopter flight to get there. It wasn't a short flight. The logistical challenges around your last mine were incredible, and congratulations for overcoming them. This is different. Tell us something about the environ around the Homestake District, the benefits it's got from 120 years of production.
Yes, well, you're in South Dakota, so it's a mining-friendly state. It's been mining, I say, since 1878. And as you point out, the town of Lead and Deadwood, which people may be familiar with, grew up around the old mine, both where the operations were up at Lead and where the milling facilities were a few miles away down in Lead. So you have existing infrastructure, and when the mine was closed, some of that still becomes available, particularly the surface, which we could reutilize for operations which we may have. You also have the benefit of the data. When we did our option agreement with Barrick, who owned the project, we're able to get access to all that 120 years of data. And of course, the mine shut down in 2002 with gold around $300 an ounce. It's now 10 times that, which means that mineralization at the time, which was uneconomic, their cutoff grade was actually around 7 grams. That's the operating grade of many high-grade mines now. And so we have the benefit of the gold price being able to raise up and provide these opportunities in the data set. So we've been mining that data set and using kind of other people's money in order to help us first with our Maitland project. And then, of course, with the Richmond Hill project, it had been evaluated and actually mined back in the 1980s for a little bit of time. But again, we have this rising gold price and this historic data that we can utilize in order to evaluate these opportunities. But as you point out, we have many thousands of people living adjacent to the mining area. People work at the Warf mine, so we have a large area to capture. We have infrastructure. You can drive 15 minutes a day from our office to any of our projects. There's power close by. It's kind of the antithesis of what we had up at Bruce Jack. You're right. Location, and that really keeps your costs down because people can go home every night. You can use power rates from power which is generated local, and you have the skill sets there. You have the South Dakota School of Mines. We have many graduates operating from there. Over 80% of our employees come and live in Lead in the local jurisdiction. So really benefits to having that mine and our opportunities located close to old infrastructure.
And let's talk about those opportunities sequentially. The first opportunity, I guess, is, as you point out, when the mine was shut down, they shut down in 7-gram material. About how much of that is left, and what possibility do you see drilling out extensions to that?
Right. So we've been able to acquire the Maitland project, which is the north strike extent of the existing mine. So the existing mine, when it shut down, had a few million ounces left in it, but that's currently owned by the state of South Dakota. What we did is looked along the extent and said, well, if there's 40 million ounces here, I think there's more ounces further along. And that's what I do as a geologist. And using James Berry, our exploration geologist in charge of exploration, Jerry Aberley, who worked at the old mine in senior management roles, they were able to look and say, here's where we should be drilling at the Maitland project. So we've gone and done that. And we've actually put 70 holes into our Maitland project and have come up with 40 intersections. And they average around 11 grams over 4 meters. So very high grade, over mineable widths based on my experience. And what we have to do is continue to drill that off and put a resource around it. And so that's one of the things we'll be doing this year, is looking to expand it. The mineralization we have at Maitland is very similar to the west ledges of the old mine. And the old mine had about 6 million ounces at around 11 grams. So we've got a good template. Our geologists are pretty comfortable. They think we have lots of potential, and it's a matter of continuing to drill that off, which we will do over time, and be able to expand that resource, which is similar to the old mine. And then, as you point out, we have other opportunities as well.
Let's do those other opportunities. Which one would you like to start with?
Let's start with Richmond Hill. We just put out a very positive SK 1300 resource on it in February of this year. And we have one of the largest undeveloped gold resources held by a junior now in the United States. We have 3.6 million ounces of measured and indicated gold, as well as also a large silver resource, which we have there as well. And we have inferred resources of 2 million ounces. We have close to 6 million ounces of measured, indicated, and inferred, and close to 60 million ounces of silver. And what's important about that is we are 2 miles north of Core's Warf mine. And the Warf mine has been operating for over 40 years now. And it produces about 100,000 ounces a year. Last year, from 100,000 ounces, it generated over $100 million, or close to $100 million, of free cash flow. So highly profitable. And we're on private land with our Richmond Hill project. And so we have a very specific timeline to be able to develop that and move it into production and be able to capture that value, as you say we've done before with Pretium and certainly with Silver Standard, is move through this development phase and get into production and capture that cash flow multiple for your shareholders.
You mentioned Warf as an analog. Are you suggesting that the Richmond Hill deposit is similar in tenor, similar in metallurgy to the Warf deposit?
Very much so, Rick. It's similar in geology. They have what's called the Deadwood Formation, which they mine. We have that at the north end of our project, and similar metallurgy. So it's an analogy. We're fortunate that James Berry, who I say is a vice president of exploration, and Lindsay Chanson, who's one of our senior geologists, both worked at the Warf mine, as well as many of our other senior employees have had experience with the Warf mine. So we're able to look at it. And as you point out, we're only 2 miles away. And we look at the fact that they've mined close to 5 million ounces now from that project. And we've just outlined another multi-million ounces. It's a new rich camp. And Warf has found new resources as well. So we're going to be there. They're going to be mining for many years. And we're looking forward to, under our plans, to start to look at production sometime in 2029.
So there's a truism, Bob, which you've exemplified in your career, that the best place to look for gold in the shadow of a headframe of a gold mine. Tell us something about any other exploration opportunities or development opportunities that might exist on this land package. Clearly, if you're talking about 5 million ounces on the Warf side and 45 million ounces on the Homestake side, you're talking about a district that has a rich resource legacy.
That's true, Rick. And, we are the largest landowner as a junior down in the Homestake district. We have over 48,000 acres between surface rights, which we own, as well as mineral tenures on public lands. And so lots of exploration opportunities that we've been able to discover from looking at the historic Homestake data. But more importantly, even with our own Maitland project, when we were drilling it for the Homestake formation, which is that older gold-rich, higher grade, we encountered some tertiary mineralization as well as some younger material. And we put a number of drill holes in it and have come up with mineralization grading about 4 grams over 6 meters. And knowing my experience working up at the certainly Bruce Jack, as well as even from my Hemlo days, know that those are good grades over good widths. And it's material that's a little nearer surface. So we have a third opportunity. It has lots of strike length potential to it. We discovered it in this old camp while we were drilling for the Mland project. So that's exciting. You come up with a new mineral type in an existing camp with good potential to it. As you say, that can be really rewarding for shareholders. So three styles of mineralization, but right now our current focus, of course, is at Richmond Hill because of the fact that you've got an analogy of a mine next door, and we've got a resource that we can kind of move along that development path into production.
You know, Bob, this discussion, this richness of opportunity reminds me of the old discussion between the geologist and the accountant. The geologist says, we have all of this potential to explore, all of this land to drill. And the accountant says, oh my God, we have to explore all this. This takes money. Do you guys have any money?
Yes, we were fortunate that just a few weeks ago, we completed a financing led by the Bank of Montreal. And post it, we had $47 million of cash in the account. And based off of our budgets for 2025 and 2026, we have the money to do the work for the initial assessment with cash flow, which we'll have out in a few months. We'll follow that with a full feasibility study. We'll be doing the permitting drilling work that we need to do. But also we've got some further expansion on the resource. So we're going to be doing exploration drilling. We'll be having 2 drills there by the time of the conference and be getting drill results out. So value add through the drill bit, and at the same time using it to do the necessary permitting and feasibility work. And we're funded with our current cash in hand to see us well through 2026, and with some warrants outstanding probably well into 2027. So shareholders don't have to worry about us being diluted. It's now about creating value with the issued capital we have and the strong balance sheet that we have in this very attractive gold environment.
I guess the deposit that has the most work done in terms of establishing value is the Richmond Hill deposit. Can you tell us, based on third-party documentation, things like PEAs, resource statements, stuff like that, what we have now?
Right. So if we look at Richmond Hill, we benefit from having over 900 historical drill holes. We put in another 145. And so that drilling, and which was historic, and also the metallurgical work that was done historically, has informed that SK 1300 resource, which we put out. If you take an analogy, and we have research coverage, which comes from BMO, Canaccord, and Argentis, good analysts who've been down to site. Their models, of course, target a much higher share price. But one way to look at this is that if you looked at, let's say, the Warf mine, or many of the producers that are maybe generating 300,000 to 400,000 ounces a year, right now in this current gold environment, they're getting between $800 and $1 billion of market cap value per 100,000 ounces of production. So we currently are targeting a 30,000 ton a day operation. We believe that'll produce about 150,000 ounces of gold for a very long mine life with the resource we have on it. And that'll come out with value with cash flow. But I would suggest then, we're targeting kind of that $800 to plus $1 billion valuation once in production. And that's certainly kind of what the analysts and market would speak to as a potential that we can look to going forward by developing this resource.
And then what would you suggest, and I know you can't quantify it until you've documented it, but what would you suggest the exploration development upside is?
At the Richmond Hill, it's still good. We have 3,000 acres, so we're a little contained because it's private land. But to the north of an area called Chisholm Gulch, we're doing drilling up there. We think we continue to expand the resource there. We also have further expansion in what we call our MW3 zone and our Coal Creek zone. So we'll be drilling those for resource expansion and then also moving that inferred resource. We have 2 million ounces of inferred. We'd like to move that up into the measured and indicated category, Rick. So then we'd be over 4 million ounces of measured and indicated, which then speaks to a good long mine life producing 150,000 ounces per annum.
Bob, congratulations on what would appear to be your third direct and fifth or sixth indirect success in the mining business. Thank you particularly for taking me along for the ride for the last 35 years. To the extent that our attendees want to learn more about Dakota, start by giving me the symbol, but then also tell me specifically who people can reach out to learn more before the conference. I want people to show up at the conference prepared. And tell me how they reach this person specifically so that nobody has to fumble around on a website.
Right, for sure. So our symbol is DC. We trade on the New York Stock Exchange. And our website is www.dakotagoldcorp.com. And if you're able to go on to our website, then we have our phone number. And I would suggest you call Carleen Gaze, who's our Vice President of Investor Relations, and also the office number. As you know, at Silver Standard Days and Premium Days, I'm happy to talk to any shareholders. I am traveling a bit, so the best thing is try with Carleen, but more than happy you're able to connect with me. And you can often do that at my email address, which is raq@dakotagoldcorp.com. And so that's the best place to start. Website, phone number to call the office, speak with Carleen, and call me. And I'm looking forward to seeing attendees, both online and in person in Boca Raton.
Ladies and gentlemen, I can confirm over 35 years that Bob is very, very, very good at corresponding with his investors. I have personal experience with this. Bob, thank you, as I say, for 35 years of friendship and 35 years of making me look smart on my investments. I look forward to hosting you in Boca Raton, Florida, and I look forward to coming to the opening ceremony of Dakota's homestake mine. Thank you, sir.
Great. Thank you, Rick.